All right, so today we're going to deep dive into a trading strategy that really caught my eye.
Okay.
It's called the ICT silver bullet strategy. And there are a ton of trading strategies out there,
Yeah.
but this one emphasizes precision and timing. It's
Interesting.
all about understanding the rhythm of the market, you know?
It's like how it breathes.
Exactly. It's not about holding on for dear life, hoping for the best. It's about quick entries and exits. Almost like,
Surgical.
yes,
Yeah.
surgical. That's the perfect word for it. And one thing that really grabbed my attention is the potential risk to reward ratios we're talking about. Like we're talking about 1 to 3,
Wow.
maybe even 1 to 5.
Okay, that's impressive.
Right. But to really get this strategy, we need to grasp two key concepts.
Okay.
Fair value gaps.
Those FVGs everybody's talking about.
Yeah, the FEGs,
Yeah.
and then the concept of liquidity.
All right, I'm with you.
So let's start with fair value gaps. What are those?
Okay, so imagine the market price just taking off like a rocket and leaving a gap in its wake.
Okay.
That gap, that's our FVG.
And it
It
represents...
shows an imbalance
Okay.
where prices move so fast that not all those buy and sell orders could actually match up. And, the market always wants to find its balance.
Right.
So it tends to revisit these gaps to fill them. And that's where the opportunities pop up.
For us traders to jump in.
Exactly.
Gotcha. Okay, so we have these potential price magnets, these FVGs.
Yes.
But how do we know where the price is going to go? It's like having a map, but no compass.
Right.
That's where liquidity comes in.
Exactly. Liquidity is key. Think of it as the volume of trading activity at a specific price level.
Okay.
So high liquidity zones,
Yep.
they're like those bustling market squares attracting price action because everyone's there.
So those are the areas we need to focus on.
Yeah, they act like magnets for the price.
And specifically magnets for the FVGs.
You got it.
Okay, so this sounds kind of simple, right?
Yeah.
We find an FVG, we look for the liquidity zone, boom, we're making profits.
Well, not quite that easy. It takes a little more work.
I figured.
Yeah. So identifying those zones, it's kind of like detective work.
Okay.
Tools like volume profiles, those can be really helpful.
Volume profiles.
Yeah, they show you the trading activity at different price levels, like a visual representation.
So I can see how much action is happening at different price points.
Exactly. Another technique is to look at the order book to see the real-time supply and demand.
Right, like who's buying, who's selling.
Yeah, it shows where the big players, the institutions are placing their bets. That gives you a good idea of where the real action is.
Okay, so we've marked our FVGs, we've mapped out the high liquidity zones, and we're ready to trade.
Right. Almost. The thing about the ICT silver bullet strategy is it's not about being in the market 24/7.
Right, it's about specific windows.
Yeah, we have the London Open,
Uh-huh.
the New York AM session, and the
Okay.
New York PM session.
So these are the times when we're really paying attention.
Absolutely. These are like rush hour for the markets. Everything's moving fast.
Okay, why are these periods so special, though?
Well, let's take the London Open, for example. When Europe wakes up,
Yeah.
volume explodes.
All those traders coming online.
Exactly. It can trigger these sharp price moves, and that's what fills those FEGs.
I see. And the New York sessions?
Same idea, especially that opening hour. A flood of U.S. traders coming in, adding fuel to the fire.
Okay, so we've got our FVGs, our liquidity zones, our trading windows. Let's say it's, 3 a.m., London's just waking up. What's our next move?
Preparation.
Preparation.
Yeah, this is key. Before the session even starts, we need to mark those potential FVGs and liquidity targets on our charts.
So we're like strategizing.
Exactly. It's like setting the stage, getting ready for the action.
Okay, the market opens, we're staring at our charts, laser focused. What's the entry signal?
We watch for the market to revisit one of those marked FVGs.
Okay.
But the real trigger, the entry point, is when it moves towards a pre-identified liquidity zone.
So it's got to do both.
Yeah, like two birds with one stone. The FVG and the liquidity zone, they both have to line up. That's what increases the probability of a winning trade.
Okay, but this all sounds a bit risky. You mentioned those amazing risk-to-reward ratios, but how do we protect ourselves if things go south?
Stop-loss orders, absolutely crucial.
Oh, the safety net.
Exactly. So for buy trades, we'd set our stop-loss just below the low of the candle that formed the FVG.
All right.
And for sell trades, it's just above the high.
So those candles are like our guides.
Yeah, they show us the price range, which helps us place our stop-loss correctly.
Okay, so that minimizes our losses.
Right.
But when things go well, Where are we aiming our profit targets?
That's where those exciting risk-to-reward ratios come into play.
Right, 1 to 3, even 1 to 5.
We typically set our target at the next significant liquidity level.
So basically, we're riding the waves to the next liquidity hotspot.
Yeah, you could say that, but identifying those hotspots, that's the art.
It takes practice.
Definitely. Experience and a sharp eye are essential.
So this strategy, it's all about speed and precision. This
Ah.
is scalping, right?
Mhm.
Not a long-term investment strategy.
Right. You nailed it. It's about capturing those quick price movements within the session.
Okay, not for the faint of heart.
No, it takes discipline and the ability to make decisions fast.
This has been super insightful. But something you mentioned earlier made me think.
Yeah.
You said FVGs show imbalances in value.
Right.
So could something like a surprise news announcement or some economic data that throws the market off balance also create those gaps?
That's a fantastic question.
And could a trader with the right knowledge anticipate these events?
Now you're thinking like a pro.
I'm trying.
Understanding what drives those imbalances, that's the key to becoming a skilled trader.
Right.
And yes, surprise announcements, data releases, anything that shakes up market sentiment can definitely create those gaps.
So it's not just about technicals.
It's about seeing the bigger picture.
Wow. This deep dive into the ICT silver bullet strategy has been amazing. We covered FEGs, liquidity zones, those crucial trading windows, and even touched on anticipating those market-moving events.
It's all connected.
Exactly. But this is just the tip of the iceberg when it comes to technical analysis.
There's always more to learn.
So keep exploring, keep learning, and who knows? You might just discover your own trading silver bullet.
Good luck out there
We'll see you next time.
for another deep dive.
Sounds good.